Are we flagging? Are we ready to break out? Hello, good morning, good afternoon, good evening, guys. Wherever you are welcome to today's discussion. What I will be focusing on today is going to be options trading. Okay, I can call this options trading 101, but I will give just brief introduction on what options really is and how options can help to hedge your portfolio in case of the market pulling down or going or pushing to the upside. Okay, so with that being said, you're welcome to the Trading Success Show. If this is your first time, you're welcome, and I hope you will enjoy this content as I lay it out. Okay, these options is going to be just the basics of options trading. Okay, when I started options back in the day, no one ever told me about this. I did not even know about this, but this will help those willing and wanting to trade options on stocks, right? So let's get into it. This is not a recommendation. This is for entertainment purposes only, and I hope this video will help you, to trade better and to understand options better. Okay, as you continue to learn and look for other resources, other places, to learn more on options. But I'll just be giving you just a little summary as per what options is all about, what I look for, apart from other advanced strategies that I use, but just the simplistic options in terms of buy calls or sell calls or buy puts or sell puts, right? So let us get into the nitty-gritty of it. Now, I have options here, and this website is called Investopedia. Investopedia is a platform that is out there. It has tons of information regarding the stock market, and we have different authors, articles, writers, whatever you can call it, on there, people who have extensive experience in the stock market, updating their article from day to day. So it is very important that you understand that Investopedia is a very useful website for you to gather a lot of knowledge in terms of trading or trading options or futures market or commodities and stuff like that. So with that being said, guys, options. So pretty much a call options are financial contracts that give the option buyer the right, but not the obligation to buy a stock, bond, or commodity or other assets or instrument at a specified price within a specified time period. Take a look at this. So many people think that the stock, for example, stock is trading at $10, okay, and you buy a call that will pretty much. So what I'm trying to say is, you can profit off that $10 contract that you bought or the $15 contract that you bought, because why? If the stock is trading at $10, right, and all of a sudden, say it's trading at $10, and all of a sudden the stock keep going up, right, and you bought $15 call option, right? So and you say for example you bought it at $1, okay? So as this price keep underlying stock keep pushing higher, so is this $1 keep going higher. So the stock doesn't necessarily have to be $15, doesn't necessarily have to go to $15 for you to make 10 cents or 20 cents. So as this underlying stock keep going higher and higher and higher, this $1 that you got will keep going higher and higher. Okay, as soon as, one thing you have to understand, so the faster the move, the greater this amount is going to be, because as time goes on, there will be, you know, a decay on that particular call option. Decay meaning, you know, you have time factors in play to affect that particular stock, okay, or that particular options that you have. Anyways, I don't want to dive into this topic too much, because you know, most of you will get confused. So I'll just go into the simple, you know, buying and selling of call options, what I look for in a simple way. So pretty much call option is all about speculation, right? So a call options may be purchased for speculation or sold for income purposes. They may also be combined for use in spread or combination strategies. So what we're going to be doing is just for simple purposes. So for the call options, you're betting for the stock to keep going higher and higher, and then for the put options, you're betting for the stock to go down. Okay, so that is for the put options. So as the price keeps going down and down and down, you're making money as the underlying security stock keep pushing lower. Okay, also you also have what we call a debit spread or a credit spread, right? So let's deal with a debit spread. A debit spread or a net debit spread is an option strategy involving a simultaneous buying and selling of options of the same class with different strike prices, requiring a net outflow of cash or a debit for the investor. So it can either be a credit spread or a debit spread. A credit spread means you have to pay money in terms of collateral in order for you to, you know, get assigned that contract, right? So for a debit spread, you already have the money, so now you can be able to purchase that particular options by using your settled cash or your cash instead of the credit spread. Okay, so with that being said, we have different strategies. We have the call credit spread, we have the bear call spread, we have the bull put spread, we have you know, different strategies of trading in terms of options, right? So now I have a website that I really use in most cases to find out where my stock is gonna go, and this is called Options Profit Calculator. So this calculator gives you the long call, the long put, all different strategies of options. Okay, so for me, for right now, I'll be dealing with the long call and the long put. Okay, so when you click on the long put, let's say we go Tesla, right? And Tesla right now we have closed 678.9, right? So let's round it up to about 679. So right now, let's say on Monday, or sorry, on Tuesday, let's say on Tuesday that, you know, Tesla pretty much open at a decent price and open around $700, you know, per share, and I bought the 650 call. So let's say I bought the 650 call and Tesla open at $700. So now I bought these options. The buy or the right. So we bought, right? And the options at say expire on the 9th of July, 650 call, and we bought it at, you know, 35.40. Let's say 35.40, which is $3,540, right? Now let's calculate this. So you click on calculator and it gives you these options, right? And right now I want to change the output based on dollar value. So you can change it based on dollar value, or you can change it by percentage, or the percentage of max risk, right? So I like to go for the profit, okay, the dollar value. So right now I don't have that 700, right? So I will go back into this calculator and make maybe like 720, right? And then say let's say 650. Okay, for between 650, so the calculator will give me something substantial, right? So right now Tesla is trading around the 679, right? So 679, right around here. That's where Tesla is trading right now. So if Tesla opened the next day at a $700 per share, that is what I'm gonna be making. So this thing is just estimating what I'm gonna make come the following day, right? So now we bought it at what? At 35, right? 3,540. And right now, because Tesla is trading right now 700, this is what we're going to be making. So at the end of the day, with the difference is going to be $1,700 we just made overnight. Okay, so this website is useful. You can type in different stocks. You can type in Fubu, you can type in Palantir, you can type in any kind of stock on this website to give you an idea where the calculation is coming from. What I want to do is I want to talk more about what options I look for, right? This is the option chain, and we have CRM here, Salesforce, right? So what I like to do on my options, or in any options I'm taking, I want to be 30 days out of the money or 45 days out. Okay, so for the days to expire, you see this one in between, right? This one right here, this is the days that the option is going to expire. Like for the 30th of July, the option will expire on the 25th day. Okay, you see, so days until last trading day, the day that it's going to expire is 25. So I like to look for call options or put options that expire 30 days, 45 days, and 1 year. So these are the three most important for me in trading. Okay, so it can be monthly or weeklies, right? But I want to get 30 days out of my contract or 45 days out of my contract. Now in this case, we have this one right here, which is August 6th, and we have August the 20th. Okay, so as soon as price, or as soon as days are getting closer, as soon as it's getting closer to my expiration, I'll be managing that particular trade. Now let's get into it more. So I like to buy calls, which is this number 2. I like to buy calls or options or puts, pretty much puts or calls that are in the money, or just $1 or $2 out of the money. The reason is because you have what are called decay. So as a result, as time goes on, your value, take for example, let me make it simple. Take for example, you have $1,000 profit and the stock begin to trade sideways. So as the stock begin to trade sideways, then your $1,000 will start to depreciate. So you're gonna be losing, 20 cents, 30 cents, 50 cents, just like that each day until expiration. So if you have, say for example, you are up $1,000 during that day of expiration, even if you are in the money, you will not get that $1,000 ever. Okay, so it will require some substantial amount of push to push that stock all the way higher for you to even retain that $1,000 back. So it can never be there. Okay, even if you're in the money, there's also what they call decay. The decay is less compared to out of the money. That's why a lot of people lost money on GME, because they were going out of the money. So as a result, the decay sets in, and it just the price, the profit start depleting. Okay, so that is for that. Also, I like to look for stocks that has long wild range. If you're talking about range, you're talking about like Tesla, Netflix, Baba, Apple, Roku. All these stocks have wider range in them. So I like to trade these stocks because they can move 5 points, they can move 3 points in a day, they can move 10 or 15 points in a day. Those are the kind of underlying stocks or stocks that I like to trade options on, and they are also liquid. When I mean liquid, the difference between the bid and the ask must be little small, like must be small. So it must be like 5 cents. For me, I like to go maximum of 30 cents, okay, between the bid and the ask. So if the stock is trading, say for example the stock is trading at $1, the bid is $1, the ask need to be $1.30. That is the maximum I can go, 30 cents spread. Okay, if you get 10 cents spread, it's still good if you're right in the money. Okay, so I look for stock that are between that level. It doesn't matter the price of the stock, so long as the stock is liquid, I am fantastic, I am good on that one. Okay, also people talk about breaking even. What you do is, if for example the stock is trading at $10, right? Now if you're long a call, meaning you buy a call and it's trading at $10, and you're going for the options, and the options you bought, say for example $10 call options at $1. So now you need to add that $1 to that $10 call options, and that is your break even, which is what? Which is gonna give you $11. So at $10, okay, and you bought the $10 call options, right? And then your bid, let's say you bought it at the bid for what? For $1. So because you bought it for $1, for your break even, okay, your break even price is gonna be $10 plus that $1. So that's gonna give you $11 for your break even. Okay, because I've heard so many people, what is my break even? That is your break even if you want to talk about that. So we're gonna focus a little bit more again on all these criteria. Now let's take a look at CRM. Okay, CRM, first and foremost, the stock is trading. Now we go to CRM, right? This is what the stock look like, and I want to really trade this stock because the momentum is there. So I do what they call technicals on it. I check my possible area of rejection, or what they call resistance, okay, on the upside. If we're pushing towards the upside, I'm looking at my resistance and I'm looking at my support as well, right? So in this case we have this right here. Okay, so let's say 251.23 is going to be our next resistance, but right now we are approaching this double top right here, which is our 249.50. So roughly 250, right? So right now I will be looking for call options that are in the money or $1 or $2 out of the money. So in this case I'll be looking for a 247, okay, 247.50 or 247 or 247.50 depending on the options, and then 250. So those are the ones that I'll be looking for as this stock continue to push higher. I also go into the 1 hour and look at the 1 hour if we're really extended or not. If we're not extended, that is good. And I look at patterns as well, because if you look at this pattern, we just broke out of this trend to the upside. So as soon as we have the pre-market, stock is trading like this, I'm willing and waiting to look at options, what I'm going to look for the next level. As soon as we break this 246.50, 246 spot, then I'm looking to pick options up. Right now we have CRM. What is going on right now? We are extended on the 1 hour chart, so I'll be looking for price to pull back to this 246.50, 246.47, then think of options that I need to take. But right now, once we go into the 32 days one, which is this one because it's close to our 30 days, right? So now I will be looking for open interest and volume, guys. I will be looking for what? The open interest, which is this one. I'll be looking for the volume. I will look for the bid and also the ask, pretty much the strike and our date. Okay, that is what I'll be looking for. On this is the call side and this is the put side. So normally I glance at the put side to see how many people are buying in terms of volume, and I also look at this call side, which people are buying the call. So I want to see what's going on the call side, and I also want to see what's going on the put side, so that I can hedge my position properly, right? So right now, if you look at this right now, like I said, the volume, you must have volume or you must also have open interest. Right now on this 6th of August, the one that is expiring in 32 days, we have huge amount of volume on the open interest side, which is the 2800 and the 2800 here. And now we go back to the strike and look at it, 285. So that they are buying the 285. And guess what? I don't like this because of what? We have our bid at 39 cents and our ask at $1.28. So this is out of our criteria. We don't need this anymore. Let's go to the next one. We have what? This one right now. So now let's look at this. This is the 255, and guess what? Our strike price, or pretty much our underlying stock, is trading at 248. So right now we're gonna be looking for 250. Now the next one that has more volume right here is this one, because if you go into this one, you're gonna see that this is $4.15 and this is $5. So the bid and the ask, the spread is just too high, right? So now we go to this one, which is what? The 185. That is the next one that also has volume, right? Now we go look at the bid and we look at the ask. So you see now we don't have too much, but at the same time is greater than our 30 cents spread. So with that being said, I will not be going for these call options because they are way too far. So it is not liquid for me to get in on this day. Okay, so the next one I'm gonna do is I'll go to the next one, which is this one right here. The same thing is also happening here because we have too much of the spread. Okay, so I will not be trading this one. Okay, but if you go in deeper, let's look at July 16, because you're gonna trade this. So that means if you're going for something that is 2 weeks or 3 weeks out, you must close the stock or that particular options trade that day or the following day. You don't have to swing it. You don't need to swing it. So now let's look at this options chain and look at what we really want. Stock is trading at 248, and now we're thinking about the 250. Look at the 250. Look at that. So we have 305 and what? 335. So this actually met the criteria. So we only have what? 30 cents of spread. So I will be looking to pick this up because also what? We have a huge amount of open interest, and this is the most contract traded on the last trading day compared to these ones, right? Look at this one, nothing. But this is a huge amount of contract traded that day. So I'll be looking to pick the 250 call options come the following trading day. Okay, so if I decide to say, okay, let me go in the money, then I'll be looking for the 245s, which is this one. See, the spread is not that bad, and also there's also trading activities going on. But overall, if I look at this options chain, I will be going for this one because we have huge amount of interest. And when you look at the stock, this 250 is going to act as a resistance as well, because I look at the underlying chart and I also look at what the stock, the options itself. So now let's look at it. You're gonna see that 250 right there, this 250 is a resistance. So that is the reason why also you have a lot of call options at the 250 level. Okay, so that is how I gauge my trading criteria. That is how I look at call options, to buy call options or to sell puts. Let's see on the put side, what do we go for? Now let's look at what the 240s. Okay, we are trading at 248. I want to go in the money, right? So you're gonna see that as you go down, you have less and less, you know, price action. The prices are smaller. So as you go up, the price increases, right? So right now I'll be looking for something that is actually in the money and not too far away, and thinking, okay, maybe we might get to 247. So I'll be looking for what, $5 range. So I'll be looking for the 245s or the 250, right? The 250, the bid and the ask is too much. It's almost like $1, right? So I won't be going for this one. I'll be going for the 247.50 puts, because we have what, 345 and what, 365, which is within our trading criteria. If you go to the 245, the same thing as well, okay, which is 242 and 265. Guys, that is pretty much how I look for it in terms of open interest, volume, and the bid and the ask. Okay, also the underlying stock, what does the stock, what does it look like? Are we flagging? Are we ready to break out? Where are the big boys? So that is what I look. And also you can check in the description below, because I also have a link of this website called cheddarflow.com. There are options algo website that helps you understand where the big boys are buying and where the big boys are selling, what they are really doing in the market. If you have the sweep coming in, if you have the block, the split, or whatever you have, both the put side or on the call side. Also, it gives you an idea what they are buying over there. Like, you know, the last trading day, they were buying Microsoft, okay, 304k as in quantity of shares at the spot of 277.65. That is what they were buying, and it cost them what, $85 million to buy this. So you can see how, you know, what the big boys are doing. Like PENN, which I'm going to be trading the next trading day, right? The bought at the 44.71, costing them about $21 million. So it tells you can put in any stock whatsoever to look at what these guys are buying. Okay, so you see that they are buying this coming week $700 call, and it's costing them about $659. Okay, so that is what they are buying. Now let's go into the chart and look at Tesla. What if there's a really a good trade there? And Tesla, we have on the 9th, right? They are buying the $700 call option. The strike price is $700 right there. Okay, now you see what I'm talking about. Now take a look at this. Is a beauty, guys. Take a look at this. 40,000 contract got traded that day. Compare it to the rest, guys. Compare it to the rest. You see that this one is the greatest amount of contract that got bought that day. They're buying this $700 strike price call that expire on Friday the 9th of July. Look at the difference between the bid and the ask. It met the criteria, right? Beauty. So, you know, this website helps you to understand where they are buying, where the big boys are really buying. Look at the volume. Out of, this is the open interest, which is 12,000, and look at the volume is greater than the open interest, which is a pause for me, which is a good thing for me because I want to be looking at this. Okay, so this got traded, this got also traded, and guess what, this website does gives you these details. You can sign up for 7 days as well using the link below. You get some discount as well, and that is pretty much it, guys. That is what I have today. This is how I trade, and I've been loving it ever since. I've been trading this for a couple of years now, and this will help you guys knowing where the volume is coming in, the bid and the ask. Back in the day, guys, I would just jump into any call options, any put options, okay, and I get really killed on all these trades. So now I get in based on criteria, I get in based on levels. Okay, so all these criterias, 30 days, 45 days out, in the money, you know, if you have to go out of the money $1 or $5, you know, on the put side between $5, you know, look for liquid stocks that trade within range. Okay, you know, you can do debit call, you know, debit put spread, you know, just to focus on call options and also put options, you know. That is important. It is really important. And also you can go to this website to help you, you know, understand what your call options will be trading as soon as the market open, so that you can be prepared as well, right? And you also follow this website to give you analysis. You also have Investopedia that will give you more, you know, in-depth analysis on call options and all that. Okay, also, you know, chart, look at the chart, look at how the stock is trading, the bid and the ask, you know, if you have range. Okay, that is pretty much it. That is the simple way that I have been trading options in the market. I've been making money off these $200 there, $500 there, $1,000 there, $4,000 here. I've been really helping myself out to pay bills. And guys, trading is never an easy thing, I must confess, but with dedication, risk management, and above all, money management strategy, you'll be able to overcome every obstacle out there in the market. And don't be greedy. Okay, take profit as you go up. Okay, I know, yes, they said diamond hands and hollering for you. I'm not that kind of trader, right? I am trading to pay bills. I am trading to understand more about the market. I'm trading to get what the market gives me. Okay, like for example, I was trading SPCE. Let me pull up the chart really quick, guys. I know I'm running out of time here, but SPCE, this is what happened, guys. I took a $45 call option. I took 2 contracts, okay, and that 2 contract was almost like $3. And guess what, this stock really shoots all the way up, and I look at my P&L, I was like up $2,000, about $2,000. And guess what, the market opened, I didn't sell immediately. I just, you know, placed the trade. I didn't get executed. I placed the trade to sell one. I sold one of my call option, and then I was waiting for it to continue higher. Guys, this is crazy. I was waiting for it to continue higher to test this spot right here. Stock never went up. So now I am holding back that remaining one, which is almost like break even. I still have profits on it, but you know, technically for me, coming back to this level is almost like break even. So right now I can decide to use that profit, you know, a little bit of that profit I made to add back to this position. But I need to see this stock breaking out of what? This area right here, the $47 spot. If we can break above the $47 spot, then I will add that one in anticipation of the move higher towards the $53 spot. that is where our next resistance is going to be on SPCE if we break this level. Guys, trading is not easy, but you can do it. Okay, you can do it with strategic principle in mind. Guys, I hope you enjoyed this segment. I hope you enjoyed this video. If you do, consider subscribing, click on the like button, share with your friends, and this will help the algorithm out as well. And I hope to bring more content out there, okay? And I'll be more focused on time the next time, okay? Hope you guys have a fantastic evening, have a fantastic morning, have a fantastic afternoon wherever you are. I love you guys, and keep showing up. If you have any questions, concern, email me at tradingsuccessshow@gmail.com, or you can follow me on Twitter, okay, or on StockTweet. Descriptions are in below, and look forward to bringing up more content like this to you guys, and have you guys a fantastic one. Peace and love.